Metrics are about performance, and we have to start by thinking about this from the perspective of the overall business, from the very top. From the perspective of the business owners or an investor who is looking to own part of the business, the big metrics that really matter are of course about the money. There are really three. First, net profit. This is how much money the business makes. It's revenue minus its costs, also known as net income or the bottom line. To get a high net profit means maximizing revenue and minimizing costs. Net profit is good, but how much money did you have to invest, tie up, to make that profit? We need to compare how much profit we made versus how much money the business has invested in itself. The main way of measuring this is return on capital employed, ROCE, or sometimes pronounced ROCE. Capital employed is the value of what is owned by the business, the assets minus the liabilities. Another very similar measure is return on investment, which can be used for evaluating the extra return, profit, generated by an additional investment. They are both fundamentally comparing the profit generated against the money tied up in the business. A higher ROI or ROCE ratio is much better. Then there's cash flow. This is a measure of the flow of cash into the business versus the cash going out. If cash flow isn't sufficient, if there isn't sufficient available cash to pay the expenses at the end of the month, the business will fail. And many good businesses do. Good, profitable businesses, but who can't pay their bills at the end of the month because of cash flow issues. A poor cash flow, a long time from when the money gets spent or invested in stuff until we get the cash back again by selling it, a bad cash flow also means we have a higher capital employed. So these three primary financial measures are really very closely related. Let's imagine I present you with a business opportunity, a totally trustworthy investment opportunity. We'll start to see how these three measures affect your decision. Hey, I've got a business opportunity for you. Do you want to invest in my dinosaur theme park business? If you do, you'll make $1,000 profit. That's certainly the first thing you wanted to know. Making profit is almost the whole point. Sounds good, you think. How much do I have to invest? Just $5,000, which you'll get back with your profit, of course. How much you have to invest is clearly a great question. If you have to invest $5,000 to make a profit of $1,000, then that is a return on investment, ROI, of 20%. Nice. Of course, it would be even better if you only had to invest $2,000, and then it would be a 50% ROI. Great! It's a deal? Hang on, you say. If I invest my $5,000 with you, when will I get my investment and my profit back? That will be in 20 years from now, after our business has been successful and our dinosaur theme park is world famous. 20 years? You want to keep my $5,000 for 20 years before you give me my investment and my profit? Bet you're glad you asked now. Being without your money for all that time is a really important factor. Even if this investment is totally risk-free and your profit is guaranteed after 20 years, being without your money all that time is a big deal. Never mind the performance of the dinosaur park business. If you invest all that money of yours and you don't get it back for 20 years, well, what if something else comes up you want to invest in or buy, or you have an emergency you need the money for? That investment money of yours is tied up, and that could be a big problem for your cash flow. So the time without your money is super important. Just as the profit, return on capital employed or return on investment, and the cash flow are clearly the most important things for your considering an investment opportunity. The same is true for the financial success of a business, which wants to make lots of money whilst having less money tied up in it, and a nice fast time from spending its money on wages, material, etc., to getting its money back from sales. So, net profit, return on capital employed or return on investment, and cash flow. These are the three top metrics that the people at the very top of a business will care about most and are the most important for the overall success of the company. Maybe you're not the owner or the chief financial officer though, and these can seem a bit abstract. We'll have to go down a level and think how the objectives and metrics at department and team levels of the business can contribute to these top-level financial KPIs of the business.